Mira Business FM, where business comes to talk.
It's the morning drive. Gold markets entered this week on edge. Uncertainty and volatility rule as geopolitical tensions reshape global sentiment. Will we soon record highs as safe haven demand intensifies? What's going to happen in the precious metals market? The venerable and veritable Jeff Rhodes joins me online. Jeff, always good to see you.
Yeah, good morning, mate. How are you?
I'm all right, thank you. How are you doing? I'm guessing, in Iraq this morning?
I am, I am. I'm here. I'm coming back to Dubai today.
Right.
I hear that the kind of roads are back to normal. So it's funny taking comfort in the fact that roads are going to be busy rather than not busy.
Who'd have thought that would be what we'd be discussing this morning, Jeff?
Yeah.
No, I mean, things are very much coming back to normal, slightly quieter, but I think you're right. Jeff, we're coming up 5 days on. What a time, eh?
It is, actually. Tim, if you remember last Friday, we was talking about, waiting to see what would happen on the Monday.
Yes.
We knew that something was going down over the weekend, and it duly went down. And then when the markets opened on Monday, I was actually mentally prepared for a fresh all-time high. And just to recap, on the Friday before the weekend, gold was finished around about 5,250. And I was talking about, we could easily be above 5,600 or wherever. It would be difficult to call because, of course, the thinnest time of the week in terms of trading volume is Asia first thing on a Monday morning. And the market was vulnerable on the upside, but it didn't really take off and it stalled ahead of 5,500. The high on Monday was around 5,450. And then the price started to come lower. And then a kind of new factor has come into play that I guess certainly I didn't think of, but when you do look at it, it's quite logical. And that is oil prices. So oil prices with the problems in the region, oil prices have gone up sharply. I think Brent crude is up around $82 a barrel, and for a long time was around 70.
Yeah.
Now, what does that mean, Tim? It means inflation. Okay, inflation good for gold. Supposedly good for gold. However, the real driver of gold's rally, in my view, really over the last 2 years, but certainly in January, was this growing feeling that there would be a sharp cut in interest rates this year by the Fed.
Yeah.
And that was predicated on inflation being under control. And we know that President Trump is in favor of 2% interest rates. And with the new Fed governor coming in likely to agree with that, that was the whole emphasis, was lower interest rates. But when you've got oil prices sharply higher, and that has a big effect on the US, because this is very much a gasoline-driven market. So higher energy price, higher petrol prices, bad for inflation. Bad for inflation means no cut in interest rates, and that caused the sell-off to just below $5,000 yesterday. It was the thought that interest rates are not going to be cut until later in the year was the main factor driving gold lower yesterday.
There's a perfect storm of factors at the moment, it strikes me, Jeff, with regional tensions, safe haven demand. We've got key US data this week, non-farm payrolls, employment figures. There are so many, I hate to use the word conflict, but conflicting factors at the moment, aren't there?
Yes, there are, Tim, but I have always argued, and will still argue, the case that gold is driven more by economic factors, by foreign exchange rates, the dollar, and interest rates. And when the dollar is under pressure, money will go into gold as it goes into other currencies. But certainly, gold is known as a zero yielding asset. Great in terms of protecting your wealth, but doesn't give you any return, doesn't give you a yield. And so where you have asset classes that, if interest rates were 4 or 5%, very difficult for gold. But interest rates of 2%, not difficult for gold at all. And so I argue strongly that longer term, it is economic factors that drive all asset classes, including gold. There is no doubt that geopolitics do have an impact, but that tends to be fairly short term. And let's face it, we had this major problem over the weekend. It's the biggest geopolitical situation we can imagine, and gold goes down.
Yeah, that's remarkable, Jeff.
It's remarkable. And I think it talks to the fact that let's see what happens on Friday with non-farm payrolls. If they come in soft, gold is back on the ball run. If they come in strong, then you'll see lower gold prices. I fancy it to be neutral, actually.
Okay.
So it leaves gold where it is today, in and around $5,000. And I'm starting to feel that we're going to be in this area for some time.
What else could limit the upside for gold? I mean, I'm thinking of crude oil prices. If they are sustained at a higher level, that's a natural answer, isn't it?
It is, yeah. No, it is because it would be with energy prices, certainly petrol prices at the pump in the US, if they're going up, I cannot see the Fed cutting interest rates at all.
No.
Wouldn't make no sense because you would cut interest rates if you want to stimulate the economy, but actually, if you've got inflation, which it could be rampant because of energy costs, and that I think not everyone, but maybe you would agree with me that the key to inflation for the man in the street is one, the cost of petrol, and two, the cost of his mortgage. And so, we're going to see, right? If we see elevated crude prices for any period of time, that will feed inflation in the US, and that will take interest rate cuts off the menu this year.
Jeff, I've not had a chance to read your report today. I've had a very quick flick through it, but just run us through writing that report this morning and because at the moment it's very much kind of day to day. We're digesting so much news and so much reaction and so much analysis. What was in your mind when you were sat writing your daily report this morning?
Well, it's a very good point, Tim. And my daily reports are focused on the now.
Yeah.
Not on next week or next month or next year. The daily reports are about trying to give a flavor to my clients about what's been going on and what is likely to happen for that day. And frankly, this morning's report was quite easy to write because it was very clear why gold had fallen from just around 5,400 to just below 5,100. Okay, and it was clear, and that was the threat of the Fed not cutting interest rates, or the likelihood of the Fed not cutting interest rates in a scenario where you've got rising energy costs and rising inflation. So that was quite easy. And I do believe that with all of these factors, let's use the football analogy, shall we? It's like a score draw.
Right.
You know,
Right.
it's like Liverpool, Man United, 4 each at the moment, and going into extra time. I can't mention, I'm not mentioning my team, Spurs, but because then you know there's going to be a lot.
Yeah.
So, but honestly, I think seriously, it is these factors are countering each other. So obviously, geopolitics bullish, um, no interest rate cuts, bearish. And so bullish, bearish, we're stuck in the middle.
Well, we are at the moment, and I guess it's natural, isn't it, that we're in. It seems like we're in a holding pattern right now.
We are definitely in a holding pattern. And but what I would say is that the way the government here handles things is so good. I mean, there's no concern, no panic. Everyone's doing what they should be doing, like largely staying at home. You know, myself, I've been working from home this week. So I think there's no panic in markets. And so a panic would have been $6,000
Sure.
after what happened over the weekend. And it wasn't out of the question. But the market opened, it had a bit of a rally and then came off. And it was quite a sharp sell off yesterday, but it's back in the middle. And I do think this period of sideways consolidation, effectively between 5,500 and 5,500. I think between they're the parameters for me with the market. A clear break either side, I think, would yield $100. I do.
Okay, so I need to ask you about your other favorite shiny metal. Let's talk about silver a little bit, Jeff.
Well, it was high silver lining on Monday morning
It,
to start with.
it really was.
It was indeed. We were up at $97, and I thought, here we go, $100, here we come. But then the precious metal sector turned on its head, for the reasons we've just been talking about, and but the silver volatility is such that a 10% up or 10% down in a day is nothing special. Really, this extreme volatility is not something I've ever witnessed. Maybe in March 1980, when we went from, I think, what was it, $50 in January 1980 to $10 2 months later. So yeah, there was a lot of volatility then. But not the kind of volatility we're seeing now. So like having seen 97 on Monday, we saw 77 yesterday at $20 lower, or whatever that is, 15%.
Sure.
It's just incredible. So look, I remain convinced that in the longer term, silver has better fundamentals, demand supply fundamentals than gold. And it does have that kind of monetary aspect of gold. So it's kind of in this situation, it's the best of both worlds. And I still believe silver is this for the next period of time, maybe $70 to $90. But eventually, once we break back above three figures, then it will be off to the races. So I haven't seen anything in the last week that would change my mind about being bullish for the year overall.
I mean, there's certainly been no great silver discovery, has there? So the supply side hasn't
There won't
changed.
be. There won't be,
No.
and because look, you could have some big copper discoveries or big zinc or gold, because and I'm not sure how many of our listeners or viewers know, but 2/3 of silver production does not come from silver production. It comes from as a byproduct for copper, gold, aluminium, zinc, etc., etc. So all of the base metals, you also find a bit of silver, and with gold, you find a lot of silver. So, and that really is a basis for the gold-silver ratio. The fact that when you dig gold out of the ground, you also get silver.
Let me ask you, Jeff. This is your trade, your career has been for some time. At the moment, there are geopolitical tensions. There is volatility. There has been, and it looks like it will continue for some time. Volatility is kind of part of our lexicon now, isn't it? We use the word kind of willy-nilly, really. How do you feel about the volatility that you've seen? Because it's nothing short of remarkable in the last
It's
while.
remarkable and dangerous,
Right.
because the extent of the movements. Let's just stick on silver. The extent of the movements is kind of more than most people can if you like handle. If you're speculating, you've got a certain amount of money to speculate with. It's a bit like walking into a casino at the moment. So I think it's too volatile. For my life, it's too volatile. I'd like to see something a bit more in the middle. The years where silver was just stuck between $20 and $30. Yeah, I mean that was just, frankly, it was boring, and we'd been looking for a breakout, and it came. And I'd say the first part of all this rally, when it got up to $60, $50, $60, was really good. It was really interesting. But then it's moved up exponentially in terms of volatility in January, and it followed on in February. It looks as though we've got more of the same in March. It's too much for me. I would prefer less volatility, more stability, and a gradually rising silver price, gradually rising gold price would be good for all.
Jeff, I introduced you this morning as the venerable and veritable Jeff Rhodes, so I seem to have elevated you somewhere near Lord status. But I feel like that's not such a bad place to put you. Always appreciate talking to you. Safe journey here this afternoon. Stay safe. Jeff Rhodes is Principal Consultant at RPM Precious Metals. Good to talk to you. Thank you.
Thank you, Tim. Great.
Appreciate it. This is Mira Business FM. It's the morning drive. That's the morning drive for today. Don't forget, you can find our news on X. You can find it across social media. You can find it on the website, mirabusiness.fm. And everything we do, a reminder, we repurpose and re-edit and we podcast. So you can find us wherever you get your podcasts from. Just search Mira, M-I-R-A, Business FM. Simple as that. The news is next.
Mira Business